The UK economy continues to grow. What does this mean for the pathway of interest rates? Stay tuned to find out more. In May, the UK economy grew by 0.4%. So that's double the rate which was expected by analysts. If we put it all together, so far this year, the economy has grown by 1.5%, which is very different to what we expected last year. Really significant to this strength has been service sectors. So the service sector has continued to grow by 0.3% in the month. And what's really supporting service sector is the fact that wages are growing faster than the rate of inflation. So consumers are willing and able to get out there and continue to spend in those areas. This is really interesting timing because yesterday we heard from Hugh Pill, who's the chief economist to the Bank of England. He made some really interesting points. The first is, whilst the bank is moving closer to being able to lower interest rates, the fact that we're still seeing upward pressure in terms of prices in service sectors and wages are still growing is actually just keeping some challenges alit within the Bank of England in terms of their ability to bring down interest rates. To put that in context, services and wage growth is running at around 6%. Now, remember the Bank of England need to see numbers around 2% in order to give them full confidence that we're going to hit their target. What is supporting the inflation data is the fact that goods prices are actually falling. So in May, goods prices actually fell by 1.3%. So this is supporting the cooling that we're seeing in the headline and the core reading in the UK inflation data. He noted that monetary policy needs to remain restrictive for a period of time in order to squeeze out some of those upward pressures. So in other words, they need to hold interest rates at the current level until that target is in sight. As a result, the market shifted their probabilities in terms of the expectation of when we're going to see the first interest rate cut. Before the speech, they had a 66% probability that we would see the first interest rate cut in August, and that moved to a 50% probability. And as a result, the pound strengthened on the back of this. If we put this in context, the market today, as we speak, is expecting 1, maybe 2 interest rate cuts in 2024, maybe 3 in 25, and maybe 3 in 26. So cumulatively, around 3 years from now, we'll be at levels of around 3.5%. It's going to be very interesting to gauge the mood in the camp of the Monetary Policy Committee when they meet on the 1st of August. Why do I say that? Well, last time they voted 7-2 in favour of holding interest rates at their current level of 5.25%. But there was a shift in terms of the mood. They were starting to become a little bit more comfortable with the idea of bringing interest rates down in the near future. How will the strength of the economy and the data we've seen this morning feed into that? We'll wait and see, but it's certainly going to be a key topic of conversation for us here on Morning Markets. So please do stay tuned, and we look forward to bringing you up to date on these important updates here on Morning Markets. Thank you for watching.